Welcome back to Trading with CJ. Now, when you first start investing into the stock market, it can be quite overwhelming. There are so many different companies out there. How do you know what's good and how do you know what to invest into? Well, I want to start by saying there's not just one particular rule with this. Everybody has their own criteria. Some people are long-term investors, some people are short-term, some people just love dividend-paying companies. Everyone has their own criteria, but I'm going to be sharing with you my criteria which allowed me to start investing into the stock market. Since then, my knowledge has developed somewhat, but I do still use this criteria as a basis for my investments. Now, this is the perfect time to say that I'm not a financial advisor and this video is made purely for entertainment purposes. If you are planning on investing into the stock market, you should always do your own research first. Now, as usual, if you enjoyed this video or find it useful, please hit the like and subscribe to my channel. It is greatly appreciated. So I'm going to take it as if you've already checked out my how to buy stocks video, and in that video I cover the physical process in terms of how to actually buy a stock, i.e. getting a trading platform, etc. If you haven't yet seen that, I'll leave it in the link in the description below. You can check that out. Now, if you have, we're on to the next step, which is how to actually pick a stock to invest into. And I've got 5 simple steps for you today. And I'm probably going to say this a couple times throughout the video, but I want to make it really clear. There is a lot more to invest in than these 5 steps, but I believe that these 5 steps are a great foundation and an easy way of making your first investments into the stock market. So my first step here is very simple, actually, the easiest one, and that is to think about a company that you're interested in or that you like. Now, bearing in mind that you're investing into this, so you're going to need to put some research in. If you already know a lot about this company or you know what they stand for, etc., then you've already made your investing process a lot easier. You've got a lot less research to do, and it also makes the process a lot more enjoyable if you like everything about this company. As an example here, let's say you cannot stand McDonald's, you've never been there, you don't really like anyone who goes there, you're completely against it. Very broad example, but you probably wouldn't want to invest into McDonald's. But on the other hand, let's take something that you're interested in. So maybe you post you can't go a day without posting on social media. You absolutely love Facebook. You're always on there. That may be something to consider. Put it in your list of some companies that you really like, and it's one to consider. Or maybe, you only wear Nike trainers and you'll never buy another pair of trainers. Maybe Nike could be a potential investment. So just make a list of some companies that you really do like, you're interested in, and you know a little bit about them already. Step number 2 is to get a very basic, a general understanding of this stock, its current share price, its past performance, etc. So to do that, you're going to need to log into your trading app that you've already created from the previous video. And basically then you can search your company. So we're going to use Facebook here as an example, as we just mentioned it. We type in the Facebook stock. We can see that one share in Facebook is currently, at time of recording, $242. So it's a very expensive stock. Now, first of all, if you're buying a few of those, that's going to add up quite a lot. But obviously, you can get fractional shares on some platforms, so that's worth looking into if you're going to create a platform. See if they've got fractional shares. So I can buy half a share of Facebook or a quarter, etc. So we know the share price is currently $242. Simple. Next thing is you can see the graph here. You can go 1 day, 3 months, 6 months, etc. I like to just keep it on 1 year. You can see how it's performed over the last 52 weeks. You can see here that it was nicely going up. The crash has happened. I wouldn't worry about that. Every single company's pretty much got that same looking graph with the crash anyway. And now it's recovered and it's pretty much at its highs again. So this is looking really promising for this company based on its 1 year graph. We can go maximum here, and this is a great graph. This is literally what we like to see in companies. It has been constantly growing. There's been a couple of little dips, but now it's back at its highs. And this has been growing on this graph here from 2013. So it's almost at its highs already from that. So this is a very nice graph. That's a little bit very simple research. Doesn't take much effort as well. It's just to get an idea or understanding of where the share price is at. So step number 3 here is to go into a little bit more detail on this company. We're going to look at some company details, some key ratios, okay? Now, most apps already have this built into it, so you can just see a basic understanding of these key details. If not, you can search all of this online, Yahoo Finance, or just type it on Google, and it will all come up. So thankfully, in Trading 212, it is built in. So we're going to go into Facebook company details. you can see it gives you a paragraph or so about the company if you don't know what it is already. Tells you the CEO, the employees, etc. Okay, I don't really need to look at any of that for this investment, for my first investment here. What I want to see is the key ratios, okay? Now, this is a lot of jargon that you may not have come across before if you're new to investing. So I wouldn't worry too much about all of this. You'll learn all of this and build on it over time and become even more fluent with this. So we've got market cap, which is basically the size of the company, how big this company is, okay? This is obviously a huge company. And then we've got PE ratio. We'll look at the PE ratio, currently 31.34. Now, generally lower the PE, the better value you're getting for your money. Okay, so, but then again, that it's not always the case. If it's really low, it could indicate there's problems with that company, maybe facing bankruptcy, something may be going on. So it's worth noting that. And also, if it's really high, it's also not the end of the world, because maybe a lot of people are investing into it based on the future potential. Take Amazon, for example, the PE ratio is so high on that. However, it doesn't mean it's a bad company. It just means it's pretty overvalued at its current price, okay? But people invest based on the potential and future as well in these companies. So anyway, we're going to look at PE ratio 31.34. We take note of this. The EPS currently 7.72, and dividend yield is a good one to notice as well. If the company has a dividend yield, it's an added bonus if you're looking for that. Facebook is a technology stock. It tends to not have dividend yields, so there's nothing on this, okay? You can also go into more detail, all ratios, but we're going to leave that for today. So the main ones I really want to notice out of that is PE ratio, EPS, and dividend yield. I'm going to take notes of those. Now I want to scroll down, and we can see the profit margin for this company is 26%. Basically, is it making a profit? Yes, it is. It's making 26%, which is great. Given the current situation, a lot of companies aren't even making profit at the moment. So its profit margin 26, that's quite good. Now we can see the debt to assets is 24%. That's a really good ratio. Again, it's very low. We don't want us to have over 100% debt or a very high amount of debt. We want to keep the debt as low as possible, the profit as high as possible, okay? You can go into the full balance sheet, the full income statement as well. But we don't need to look at that for this video. We're just going to look at the basics here: profit margin, debt to assets. So we're on to step 4 out of 5 here. And step 4 out of 5 is to compare. You want to compare the company that you're interested in or looking at potentially investing into to a similar company in its field. There's no point in comparing an airline stock to a technology stock. They're going to have completely different key ratios. Okay, so you want to compare something similar. So we know that Twitter is very similar to Facebook, so we can compare this. You just want to get a general understanding if the company you're doing is going in the right direction, okay? So we look at Twitter. First thing we notice is the share price. One share of Twitter is $37 currently, okay? That's a hell of a lot lower than Facebook's. It doesn't mean that this is a better investment, okay? There may be less shares out there to buy. So that's just worth noting, but it doesn't mean it's a better investment at all. Now we want to go on to the maximum graph, okay? We can see the maximum graph here. Facebook was pretty much a nice steady line going up. This is nothing like that at all. This is a bit more of a U kind of shape. It's not really growing, okay? So that's some room for concern. The share price hasn't really grown over the years. And even at one point, it was trading at $63 per share, okay? So it has dropped significantly since then. So that's worth noting. Now we're going to scroll down to its key ratios. We took note of Facebook ones earlier, so we can see here the PE ratio is a lot lower. It's at 19. Like I said, generally that means you're getting more value for your money. However, we know that the Facebook growth has been a lot stronger than Twitter. We can see the EPS, which means earnings per share, is a lot lower than Facebook's as well, okay? And it's not paying a dividend, same as Facebook, so that's nothing to worry about there. Now we can scroll down to see its profit margin. It's very good, it's 42%. And its debt to assets is also very good, it's only 31%, okay? So at first glance at this company here, it looks to be in a fairly okay position, okay? Same as Facebook. So the only thing that concerns me really with Twitter is the fact that the share price growth, the growth in this company clearly hasn't been doing well. The share price is a lot less than what it was compared to Facebook, which you can tell is a growing company over the years, okay? So it's just worth taking to note. You want to do this comparison with a lot more companies as well in this particular field, software companies, technology companies, etc. The reason you're doing this is you want to just make sure that Facebook isn't, completely out there compared to these companies. You want to make sure it's in line or it's doing better. If, for example, Facebook had 100% debt, zero profit, and there was a very similar company with loads of profit and no debt, it may indicate Facebook is doing something wrong here, okay? So it's just a very good to get an indication, compare it to some similar companies. So the fifth and final step to this simple 5-step process is to do some research in the news of this company, okay? This is probably the longest one out of the process, because you actually have to look around a bit more. You can go onto Google, Yahoo Finance, Simply Wall Street, just loads of different news websites, read some papers, etc., anything. Get some news on how this company is doing, okay? So you want to see articles, see what people are saying about it, read some articles from analysts, etc. Have a look at people's thoughts on this company. If you're seeing loads of articles on fears of bankruptcy, etc., it's probably not going to be a good potential investment. But if you see loads of things about, oh, we've smashed our profit estimates, our profit margins, etc., then that's probably a good sign. So just do a lot of looking around, a lot of research, and see people's thoughts on this company and how it's generally performing. So that's my 5 simple steps there to getting started in the stock market, making your first few investments. As I've already said in this video, there's a lot more to investing than just this. You can see balance sheets, income statement, analysts, key ratios, etc. But we're keeping it nice and simple for your first few investments. Pick a solid company with good growth, company you know a lot about as well, and you won't go far wrong. And of course, over time, you'll improve your knowledge as well, and you can look more in depth at these types of companies. Also, just to clarify, these companies mentioned weren't necessarily recommendations, they're just examples for this video, okay? If you have found this video useful and enjoyed it, please hit the like and subscribe to my channel. It really is appreciated and it helps me out. Thanks for watching, and until next time.